Good morning, good morning. What's up, folks? How is everybody this morning? What is up? All or nothing. What's up, Bose? What's up, JC? FBI? Tis who? Tis you, buddy. Cup of Magic on target. Good to see everybody. Thank you for being here. Let me get my chat window open. Yeah, good morning to you, all or nothing. Hope you're doing well. Actually proactively gotten my screen sharing started this morning before I started digging into anything, so good for me. Maybe I'm adopting better habits. Get some of this coffee in, give folks volume seems low. Okay. Thanks for letting me know. Are you sure it's not the volume on your computer? Everybody hear me okay, or is anybody else seeing or getting the seems like the volume's low issue? If so, let me know. I'll try to figure out. Hear me okay, 5x5. Got it. All right. Well, if you do start having audio issues hearing me, and who is that? JC. It could also be Discord might even have its own volume setting if you're checking around all your volume settings to figure out why it might be a little bit low on your end. There could be a volume setting for output in Discord somewhere, so I just double check that. Seems like most people are, yeah, no problem. It seems like most people are hearing me okay, so yeah, hopefully we can get that sorted out quickly so you can not miss a beat here with some of the stuff we're going to talk about this morning. All right, so let's start digging in, start talking about just kind of where the market's at right now at the moment, what I'm seeing here just based on my charts, and really kind of looking at these levels. I don't know how many times we've talked about them. I know we talked about them several times on the run up toward this area of supply that we are currently still looks like in the process of rejecting. Could find some support here though. So I mentioned yesterday morning before market open, and again talked about these two levels several times on these live streams. 4609 and this 4565 level here on ES, these dashed lines, this green dashed line, which is a weekly support and resistance level, this white dashed line, which is a daily support and resistance level. Two key levels to really keep on watch, in my opinion. Also, this 4547 level. Again, I think this is sort of our last line of support before we see a bigger pullback, probably down to this 4505 level you see just below. So these dashed lines are, you know, if I'm just kind of sharing this chart with you from a little bit more of a zoomed out perspective, these dashed lines I think are kind of the key levels that we need to keep on watch at the moment. Over 4609, I think things could get really interesting for a bigger push to the upside, but this is really a key area that we need to break through between this 4565 and 4609 level. And again, we still have supply here. I believe it's either a 4-hour or a daily supply. Well, duh, because that's all I really chart. 4-hour supply there that we're currently also trying to fight through. That's been around for quite some time. So things I do like. So, you know, again, we're in a little bit of a potential choppy area, in my opinion. And the reason why I say that is because, as you can see, we're finding good support down here at the base of the bullish Neptune flag. We got a really nice bounce, you know, almost perfectly off of that yesterday. And again, we're finding support down in that same area again here today. So not surprising there. The thing that I like even more about this support today than I did yesterday is we also have the 333 SMA here on the hourly coming up to add a confluence of support in there between those two indicators, both saying, hey, this is a strong point where buyers should come in and hold the line. So we're trying to wrestle back over one of our key levels here, pre-market. Back over that, we may break through and start testing. I may have a level that I have not charted here, somewhere around this 4581 level, somewhere in that neck of the woods would be a first price target, and then probably up to 4609 again over that. So, you know, not the worst spot to buy the dip across the market. Again, I kind of use this as a should we be overall across the board looking for upside or downside. It's definitely a conflicted area that we're in, so I wouldn't be too big on any positions, especially upside. Below 45, 47, again, I think things could potentially really open up to the downside, and above 46.09, things can really open up to the upside until we break out of that range. I say, short the rips up in this area and buy the dips anywhere down in this area. But again, try to also focus on timing and accuracy on the individual ticker that coincides with good opportunities market wide where we could see momentum helping your cause in either direction. So anyway, that's kind of just my quick rundown of where I think we're sitting at on the S&P through the lens of S&P futures, which is generally how I like to do it because it's 23 hours a day trading. It's not really a question of extended hours or regular trading hours, whatever. It's just futures is futures, and they're running 23 hours a day, and it's a great barometer. And really, I like charting my trend lines and stuff like that more off of the ES chart versus off of the SPY or SPX charts. So, all right, let's take a look at the member selected tickers that we did over the weekend, see how some of these trade plans are playing out. I see that we also already have some ticker requests for this morning. Tesla or Oracle. Tesla we're already going to talk about on this existing trade plan, so we can probably figure out a way to kind of determine how we might want to plan this moving forward. But we do have a existing trade plan on Tesla that's still pretty fresh, so maybe we can do Oracle as well. And then IWM and QQQ, we can take a look at probably at least one of those. So AMD, this one we did member selected tickers over the weekend. So far, downside has played out for one price target to the downside. Got a nice breakdown below, back test of the resistance area, and also from a Neptune perspective, a nice confluence of selling pressure there. Ultimately pushed the price action down to PT1. PT1 held for the most part. This was probably the closest thing it had to a break. A few prints below, but overall, nice support there right at our PT1 level. That ultimately did push it back up into the kind of overall selling pressure area for the plan. It did flip some things bullish there on Neptune, but again, moving averages ultimately pointing to the downside. Overall bearish. We're still below the sell pressure range here between 118.32 and 119.65. So, could potentially see a nice backtest opportunity. That would also looks like constitute a gap fill. There was a small gap down here on AMD this morning. So what I'm thinking is, based at least on the 5-minute alone, 200 SMA is probably going to wind up somewhere right at our put entry level as we get closer to open. Also would be a gap fill. Gap fills tend to breed reversals in the price action. So 118.32 could be a really great spot to take a short and essentially put our existing plan into effect with your first target to the downside there at 116.64. And then we've got a nice confluence up here that adds some strength to our stop loss up there at 119.65 with 333 SMA. Again, that would be your one and only time you would average down on this trade. And if it goes on to be invalidated, then just cut them all loose and move on to the next one. So that's AMD recap where it's sitting right now. Tesla, which all or nothing asked about this morning. Let's take a look at this on some smaller time frames. So we did this, or I did this one Sunday evening, published it in the options watch list channel. Let's take a look at this on 5 minutes, see. So we definitely got a confirmed break to the downside, but this is why we have stop loss average down levels, right? Great opportunity to really adjust your cost per contract there on that test of stop loss average down along with that 200 SMA confluence. So really great opportunity there to, if wound up in puts here, never took profit and held to the point where your contracts went red and pushed all the way up to our stop loss average down level. Again, I call it a stop loss average down level because that's the exact spot where I want to try to average down if the conditions are right for my trade. And So, again, if the conditions are right and I do add to it and average down, uh, one of two things generally happens. Either it really helps me get this trade back on the right track, or I wind up stopping out because we're right at my overall stop anyway. And those contracts that I added on my average down take a very minimal hit. They don't really compound the bad trade any more than it was, the shape it was probably already in, I guess is my point in those scenarios. So, pretty clean rejection right there. Again, nice confluence. Now pushing down, getting much closer to PT1. Again, also probably another back test opportunity. Pretty close to a gap fill confluence there, so keep an eye on 235.38. If you start to see volume come in and wicks start to form above your candles, as we test that level again, assuming that does happen, because we do have a little bit of a confluence still to fight through here with the 100 SMA and top of the Neptune bear flag with selling pressure. But if we could push up through all that, 235.38 could definitely be a great spot to look to enter this on a back test and rejection of our put entry level. So that's kind of my thoughts on Tesla. I hope that's helpful, all or nothing, but we can also, since that was sort of already done for us, take a look at Oracle. It's one that I had my eye on for a little bit there, and I think it was just kind of listing left to right. It wasn't really getting any vertical or downward movement, so I think I just kind of stopped paying attention to it a little bit. So probably not the worst thing to do to circle back and check that out again. So coin, last one from our member selected tickers over the weekend. Another scenario where we have an interesting confluence on a back test of the or potential test here of the call entry level up there at 140.97, 200 SMA sitting right there on the 5-minute. Also, again, gets us very close to filling this gap back to the upside, so it could be a gap fill and reversal scenario here too. I'm seeing that a lot, so be careful chasing anything to the upside this morning. There could be some profit taking from shorts. There could be some bull trap set. Not saying don't plan for the upside, don't trade the upside, and if you do, certainly trade it with conviction, but just be a little bit cautious, because again, I'm seeing a lot of tickers where it looks like there's a gap to fill that's going to take it right into a resistance or a confluence, which sort of adds another type of confluence, in my opinion, for a potential rejection and push to the downside from there. So just, keep that in mind. I'm not going to tell you how to trade or execute, but I will tell you to keep that in mind, because it could become relevant. So anyway, coin kind of still just wait and see. We did get a breakout, actually pre-market, of the call entry level. Got a back test shortly after open, pushed up to PT1, came back down. Got a nice confluence entry opportunity to take calls off that stop loss average down. 200 SMA confluence right there. As you can see, just rode the 200 SMA pretty much all the way back up to PT1 from there. So sort of an even better trade opportunity than what we saw here first thing in the morning. So again, use these levels, pay attention to your indicators, find those confluences, and use all of that as a means to utilize the levels and ideas that I'm providing. This is my point. All right, so I think that does it for our recaps. We've got a couple of tickers to take a look at. Also, in the meantime, if you guys do have any questions, please feel free to post those in the chat area of the live feed here. If you're newer to joining these, there's a little word bubble looking thing top right hand corner of the morning live stream channel. If all that you see is a bunch of avatar tiles, there is a little chat section. So that little word bubble top right hand corner of Discord, pop that open. That'll let you see the chat. That's where you can ask me questions, give me ticker requests, all that sort of stuff. So feel free to interact. I don't necessarily need this or want this to be a lecture. I want it to be as interactive as we can possibly make it. All right, so this is kind of what I was talking about, right? On Oracle, we did a trade plan on this. I think it was during a live stream. Yeah, it looks like we did it Tuesday, the 14th of November. And it caught our call entry, or very close to it, and has rejected since. In fact, yeah, I was going to say I thought there was a cleaner test of it shortly after we did our trade plan. Caught it right there last Tuesday the 21st. Yeah, came right up to our call entry, rejected. It's kind of just been bouncing around in this sort of a choppy zone, in my opinion, between 113.27 and 117.67. And again, it's just kind of been choppy. It's sticking between these levels, not really getting any convincing breaks anywhere that I'm seeing. Let's extend this over. Sorry, you mentioned Tesla call entry for calls 234.34. Well, it's also in the options watch list, FBI. But 234.34, no, I'm not sure where you got that from. 235.38, I said could be a good backtest opportunity to take puts because there's a confluence of resistance there and would also be right around a gap that would have just been filled. So again, a backtest of up in this area could be a great spot to pick up a rejection. So what I'm kind of looking at, right, is if we do push to the upside here, 200 SMAs coming down there, right? Gap fills right in this area. That could very well lead to a move that looks like that. That's kind of what I'm thinking. So hopefully visualizing that helps. Okay, back to Oracle again, kind of just sideways in my opinion. Levels seem to be reacting well. First time I think we've really, no, not the first time. I wonder if there is. It's an interesting little bounce, although we are looking at the 5-minute. I don't like to put a lot of weight into a 5-minute chart. I like to trade on it, execute trades on it, but don't necessarily like to set support and resistance on a 5-minute. It's a little too micro level for me. Yeah, I think there is, or maybe this 4-hour level's just been nudged a little higher. I think I might have drawn this maybe off of older price action than this sort of current run just before our trade plan got put in place. I think it's probably sitting a little bit more like that. Could even be, if we're going to get real clean, a little bit higher. That. Yeah, that looks a little bit better now. Again, I think we charted Oracle live, so may not have been quite as laser accurate as I like to be with these levels. But so the question is, do I see anything that makes me change my mind about potential entry points for Oracle? This is an interesting little point of resistance here on the hourly. I also see some decent support on it. So I almost wonder if we could find an earlier entry here and then use what was our call entry target, or maybe even that level just below, as PT1. Let's take a look at this level real quick. I think there might be something here that we could use. Let's see, Eagle Eye, any thoughts on HSCS? Wow, you've picked a ticker that I don't know what it is off the top of my head, so we can take a look. What's up, Chris? It's better late than never, brother. Glad to have you here. Speaking of coffee, there's your coffee ASMR moment. All right, I want to check out this yellow level real quick. I don't want to base it off of a limited amount of price action. I don't think I am. I think maybe I just had that level that was on my chart a little bit off, possibly. Or no, wait, this was a new level. Sorry. But yeah, I'm definitely see it's an active level. So I don't hate that idea. So let's do this. Let's adjust this trade plan a little bit. Whoops, I'll leave that there. Not worry about this because I think we can break over 115.93. Got a shot up here at 117.26. I'm gonna bump that target down just because of, have we had some tests and really one really clean test of that level that's a little bit higher, that daily level? Yeah, but I like that, just seeing some of these rejections and these, wicks that are coming just a little bit. I mean, I would be taking profit, but I know a lot of people, especially newer people who haven't figured out that it's easier to take profit on approach to your target versus like waiting to hit the target to the penny and then potentially getting caught, in a rejection scenario where you're trying to chase a fill that's just eating away at your profit. Make sure you're taking, so sometimes that will kind of, just to make sure that I'm trying to, how do I say this, plan around a pretty common, um, new trader mistake, I guess. I'll set my targets a little bit lower just to be extra sure. And I think that's also just appropriate here, and there's not going to be a huge difference in the premiums on the contracts between 117.26 and 117.67. So the question is, though, do we leave that in place? I mean, really, even this wick that came up and hit over 117.26, I mean, looking at the hourly chart, this is the closest thing we've had to a confirmed break over that level, and it still didn't even quite get to that as a rejection point. So 117.67, I do think it's a good level to watch, but I think it's just a little too stacked to have PTs 1 and 2 at 117.26 and 117.67. So I would certainly keep it on watch, but would not, wouldn't put a ton of, I'd be taking profits earlier. I guess what I'm trying to say is I was also kind of eyeballing a potential second price target that seems to be sticking out a little bit to me. Again, maybe my 118.30 level I've got there is not as spot on as I'd like it to be. But this is an interesting level. Yeah. And 119.50 starts to look, I think, interesting over that. So let's take a look at that real quick just to make sure. Yeah, I agree. Or I have decided, whatever. All right, so here's kind of the new, and I like our stop loss average down, I think, right about where we've got it for the put trade plan. Just take a second look at that, though. Now, no, actually, I think it does need to be a little bit higher. Take that back. Let's take a look at this level real quick. Good morning. What's up, San Andres? What's up, Bubble Tea? Some bubble tea. All right. 115.13 is where I think. Yeah. Yeah. Yeah, I do think we have a better, more conservative stop loss level that we can use here. So let's adjust this plan. It's going to look like this now to the upside. I think to the downside it's probably not going to change, but we'll check that too, of course. All right, so that brings this to our third price target. I like how that looks. Yeah, nothing changes my mind about where this downside needs to be. We haven't really seen any price action or enough price action since we wrote this plan initially that should change it. So I think we're good to go on that. Let's flip on our indicators, make sure I'm not missing any confluences, anything that might want to make some adjustments on, just to make sure that we're not running right into a potential chainsaw. This is interesting here at 116.44. There is kind of heavier. If you want to be extra safe on this one, I'd say wait for a break of that 116.44 level, but I still think that there's a good entry over 115.93. Yeah, yeah, yeah. 5 minute, I mean, over that breaks out over everything. So just, be a little bit conscientious, cautious of 116.44. Maybe when you get there, set your contract stops at break even. That way, if that does wind up being a hard rejection level, you don't get stuck in a red trade that might be hard to manage from there. So anyway, let's publish this to the chart, and I'll talk us through it one last time. Oh, also be mindful, earnings report coming up next Monday. So, what's it, pre-market? No, after hours. So you could potentially swing through the weekend, but be careful. All right, Oracle trade. I tested at 306 for the 120 calls, 119 expiration. You're saying take the profits. Well, no, that's not 100% what I'm saying. 120 for 119. I mean, I think based on the amount of time you've given the trade, I think those strikes are okay. Personally, I'd say, just generally speaking, play a little closer to the money. FBI, just my personal 2 cents. Like, for me, if I'm taking an entry at essentially 116 and my first price target's at 117, I think I've got a good chance of getting up to 119. I want that first price target to get me, pretty much close to, if not in the money by a little bit. So, if I'm getting in at 116 and first price target's just on the, north side of 117, then I'm probably taking 117 calls with that same amount of time. So that'll probably, contracts are going to be a little bit more expensive, but it's about dollars gain, not percent gain, in my personal opinion, unless you're kind of day trade scalping and trying to establish free runners, then percentages and being smart about trying to take the right out of the money contract makes a little bit more sense. But again, just all of that depends on your risk tolerance and your personal approach and strategy when it comes to trading. So anyway, as far as like needing to cut them, I would say probably goes back to what is your plan for Scribe. I'd say overall Oracle looks okay as long as it holds this 114.48 level. I think if that gives way, then definitely I would be worried about riding calls at least all the way down to 113.27 and possibly lower. So that's my 2 cents on what sounds like is an existing trade of yours. What I'm looking for here on Oracle is a break over 115.93 per the plan that we just adjusted. That will give us a first price target to the upside at 117.26, second price target at 118.09, third price target at 119.50 with a stop loss average down at 115.13. To the downside, we're looking for a break below 113.27. That should give us a first price target at 111.16. Then targets from there 108.94 and 107.61 with a stop loss average down at 114.48 for your downside trade plan. That is Oracle for you. Let's take a look now at FBI asked about IWM and QQQ. Let's take a look at IWM. That one's been really interesting to me lately, and I'm still kicking myself on missing what was such a textbook setup as far as my personal approach to entries, and I didn't do anything with it, and I think that was the day that IWM ran like multiple standard deviations to the upside. I think it's back here, yeah, this day. I mean, just so frustrated with myself on that one. All right, anyway, where can we take IWM from here is the question. This is the level I was actually watching all day yesterday up here at 186.87. This is weekly resistance. I think that's going to be a tough one for us to get through, but let's see what potentially happens if and when we get over that level. And is it the right spot to take an entry? Does it really open up a good chunk of upside from there? Well, there is still, actually, and I've missed this when I did my IWM levels, although I think, well, no, they were, I think, start off as member selected tickers, so at the time I must have just missed this. There is a gap to fill here still in IWM. About 188.58. What day is this? September 5th. Let's take a look at this on a smaller time frame real quick. Yes, this is a little bit lower actually. 118.32, gap fill up to, come on, there we go, 189.68. So that's interesting to me. I think that also gives us pretty clear, if we do break over 186.87, this is an interesting rejection, but this to me, strong confluence of indicators right there on the 15-minute back test after breaking below the 333, 16 WMA coming down, both Neptune indicators saying bearish, play for the downside. So I don't know if that one rejection is going to matter all that much because it's a different picture that we're looking at right now. So I kind of think over 186.87, this 188.32 at test of the gap entry, it's probably actually a reasonable target, and then I'd be looking for the gap fill after that. They're at 189.68. Now there's clearly, or it looks like they're probably, let's go back to September 5th again. Again, I've not charted IWM thoroughly. This pre-market high is interesting to me, right around 191. Not saying it's an actual level yet. $190.70. That is a bit of an interesting level, actually. Let's see. Yeah, it's right in that neck of the woods. Maybe just a little higher. That's fine. Come on, Dave. There we go. Yeah, probably right about there. Let's see. 190.75. Yeah. Yep, I think that's third price target. So then the next question is, where's a good stop loss level? Let's go back here. Interesting little double bottom there around 185.90 so far, but certainly not enough price action in that range alone to say I'm convinced that's something I want to put money behind. Maybe a little bit higher even. 96.14. Yeah. Oh, this would be a great spot to figure it out. Could give it a little tiny bit more room. But yeah, right about 186. Let's see how that shapes up moving back forward. Let me flag that level so we don't lose it. Yeah, I think we can give it about that much room to the downside. Also sets us up with proper risk reward for sure, especially to PT1. So overall, I think that makes it a good plan upside wise. So this is what we're looking for. Break over 186. Well, I'll circle back to that. We'll do a full recap here in a minute. Sorry. All right. So then the next question is, where does downside open up? Kind of looking at this 184.54 level, but let's make sure. That could be a little higher. Could be 185.21. Yeah, I don't hate that actually. I think we can share a stop loss there at 186. Some interesting support and resistance near this 184.21 level, back to that little stretch of activity, but my eyes are kind of on 183.75 as a first price target. Then it gets real interesting below that, actually. Yeah, I like it. Let's go 183.75. Weekly support. First target. Honestly, below that, let's just check real quick. I mean, it's kind of looking like 181.62. Almost a $2. I mean, there's just a big buy imbalance that got established on that run to the upside that I don't think we've really, at least not anytime recently, done a great job of building up any other support or resistance levels around there. 182.41. We could potentially catch that prior resistance turn to support, even though we didn't really do much with it on that run to the upside. I think it's just smarter to have a little bit. Again, I want to go one level conservative, I guess, potentially. And then, again, it could be 181.62, but I think realistically we wind up flipping our prior call price target to being a third, or prior call entry level. There we go. Get the words out correctly. To being our third price target to the downside. So, yeah. Pretty solid IWM plans here, I think, and I like the confluences that I'm seeing. So definitely keep an eye on this one. Let's go back. I think, yep, sure, for sure, FBI. Happy to help. Hopefully you are learning stuff here. I think, oh, did you DM me recently? Do I still owe you a response? I do. Yeah, well, I'll get back to you on your questions about the sounds like ultimately what you're looking for is mentoring. So I'll definitely get back to you on that. As I'm sure you can guess, my DMs are generally busy. Sometimes things get lost in the shuffle, but I try to make sure I stay on top of everything. Sometimes I just have to remind myself to go back and kind of comb through them and make sure there isn't anything that's still waiting on me to reply. So, but I try to get to those as quickly as I can. All right, so this is our Oracle trade plan. All right, so what we're looking for here on Oracle is a break over 186.87 to play for upside. That should give us targets at 188.32, 189.68, and 190.75 with a stop loss average down at 186 flat. To the downside, we're looking for a break below 185.21. That should give us targets at 183.75, 182.41. What did I say? Did I say Oracle? Sorry, I meant IWM. I'm like looking at I'm reading Oracle in the chat and talking at the same time. Sorry, IWM trade plan. Thank you. we're looking for a breakdown below 185.21. That should give us targets at 183.75, 182.41, and 180.85 with a stop loss average down at that same spot, 186 flat. Would also help if I post this in the chat. Yeah, jerk. Get it together, JTW. Actually, I just copied the image for this. So I just talked through it, but now you guys have the static chart there. And as a reminder, again, what we were looking at when we're looking at these charts, these solid 3-pixel heavier lines, those are entries typically, or if we're below that level, that's your entry for calls. If we're above that level, that's your entry for puts. Dashed lines are your price targets, and then the heavy dotted lines are your stop loss average down, that 4-pixel dotted line. And again, we also highlight this using our long and short tools. Also helps define our risk reward on these setups. So this little white shaded area being your risk area, this green area being your potential reward. They're your targets on the way up. Same thing to the downside. If there ever was an overlap, it would look something like this. So that would be an overlap where if we had a stop loss all the way up here for the downside trade plan. But I think you guys get the gist, and those of you who have been following this stuff long enough probably know exactly what you're looking at when I post these. So with that being said, we are getting pretty close to market open, just shy of 20 minutes out, and I do still have the SPY plan to put together for you guys. So I think this is a good point to wrap it up, because if we start on another trade plan, we're going to run a little too close to market open for comfort. So with that, I really appreciate you guys joining me here this morning. As always, we will be back Thursday at 8:30 a.m. Eastern Standard Time. So please come back then and join me for more live planning sessions. And again, we'll, unless there's a market holiday or I'm on vacation or something crazy is going on, every Tuesday, Thursday, 8:30 a.m. Eastern Standard Time here in the Xtrades Discord server and live on YouTube. Please come join us for the FOMO live stream. So with that, I'm going to let you all go, and I'm going to let you go with our FOMO live stream catchphrase, slogan, motto, whatever you want to call it, which is plan your trades and trade your plans. Go out there, get some green. I will see you guys in the chat. Thanks again for joining me. See you Thursday at 8:30 a.m. Eastern Standard Time. Have a great day.